Joining us for a look at today's markets is Annatjie van Rooyen from MyWealth Investments. Thank you so much for your time, Annatjie. I think so far this year we've gotten used to red screens. There's been a lot of selling. We did see the markets try to stage a rebound earlier on this week in one trading session, and we are seeing today also being a trading session in which the markets are trying to dive into green territory. But just from the red screens that we saw before, because it has been mostly weak, is that negative sentiment, downbeat sentiment, or is it caution?
Hello, Annatjie. Yes, let's go back one step. The market ended on a very strong note in November and December, and probably got slightly ahead of itself as it was starting to discount lower interest rates going into 2024 in the US. And the anticipation is for interest rates in the US to start going down by the end of Q1. We then had quite a strong jobs report at the end of last week, which I think made investors doubt. And we also saw the probabilities coming down from 87% for a rate drop at the end of March to 50%. So I think the market became quite oversold over a period of 1 week as we gave back all the gains of last year in the first week of this year. So it was quite a horrific week on the market.
Yeah.
So it's a welcome bounce in the market. And I do think there is a bit of sentiment change.
But I mean, I also, even with that bull run that you're talking about at the end of last year, that was mainly ran by, the AI stocks, Nvidia, and the tech stocks, the so-called magnificent seven. And I mean, also with the risk that we have now, you talk about the expectations for a rate cut in March actually reducing. Would you say that the bull runs that we will still continue to see for a while are still going to be concentrated, and it's going to be very hard for that to broaden out for at least a little while this year?
Do you mean concentrated in AI stocks?
Yes.
Yeah, I think any pullback in those stocks are definitely buying opportunities.
Yeah.
But I'm actually quite bullish on all markets, even South Africa, believe it or not, because if rates start to come down in the US and that market starts to perform well, we will see a spill over to the South African market. And the most important thing is that the US dollar should come under pressure. We've already seen the inversion in the yield curve coming down to only 34 basis points this morning. If that dollar starts to come down, that bodes well for commodity prices. South Africa is a producer of commodities. Commodities will become cheaper, and we need demand from China to increase. So maybe we see a consumer-driven recovery in the first half of the year, and if we are lucky, we see a turn in the commodity cycle towards the second half of the year. And that's also, interestingly enough, the same time that we expect rates to start coming down in South Africa.
Well, extending the conversation of commodities, one of those nerve-wracking sectors is the oil market. And of course, there's been a lot of volatility there. Earlier on in the week, we did see a slump there, and then we saw a rebound. So it's quite volatile. And I was actually reading an article, with an analyst there saying that the pressure that we saw in the beginning of the week in that oil price was a little bit overdone. Is it worth sticking to oil-exposed stocks, even through the volatility?
Yes, definitely. It's very difficult to time the bottom and the top. So also Standard Chartered has recently produced a report where they say that long-term demand growth is expected to remain above the long-term average for 2024 as well as 2025. And once again, China is the kingpin. We've got inflation numbers coming out of China tomorrow morning. They are grappling with disinflation. So hopefully we can see a bit of an uptick in those inflation numbers and the long-awaited aggressive stimulus that's been promised by that government. So the minute that starts coming through and US rates start coming down, the dollars start coming under a bit of pressure, it's a whole snowball reaction. And then I think the oil market will lead the recovery of the other commodities. So I would definitely stick with oil. I think oil realistic levels is probably $85. And obviously right now there's geopolitical tensions. Everybody is closely monitoring that. We don't want any shocks in that oil price because that can filter through to inflation, and then that can change interest rate expectations. So all things being equal, I do think that 2024 we'll see a recovery later in the year. But we need China, we need demand from China to start picking up.
Yeah, indeed. Well, talking about demand from China, of course, as we're talking about commodities, Teresa actually released its production update for the quarter ended December. That is their first quarter of the FY24 year. They did say that they did see an uptick in PGM and chrome production, to the point where chrome production, they actually reached a record quarterly output on that front. Prices are kind of remaining flat. What would you say about Teresa's position in that commodity space?
Yes, look, Teresa is a quality producer with a very strong balance sheet. Just unfortunately, they're much smaller than the other platinum producers. They diversified, as you have mentioned, into chrome market, which has performed extremely well. But once again, demand from China has been sluggish. Chrome exports have decreased quite significantly. So even though they are smaller, they will also benefit tremendously if the commodity cycle starts turning and demand increases in China.
All right. Well, Annatjie, I actually wanted to, before we go to the stock picks, I wanted to pick your brain on Telkom, because earlier on in the week, it did release a renewal of the cautionary, in which there have been there's been progress made on the sale of its Mars and Towers business, SwiftNet. So it is in exclusive negotiations with a consortium of investors there. I was actually reading a Business Live article on how the stock has rebounded somewhat from its 2023 lows, but still very far off from the record high that we saw in 2019. Of course, progress is being made in terms of that portfolio rejig, and as it chameleons itself. Is there light at the end of the tunnel for Telkom?
Yes, I think so. If you are patient, Telkom used to be the darling of the stock exchange from 2013 to 2019. And then things just went pear-shaped for them. But right now, I mean, there's quite a bit of upside because it's trading at such a huge discount to its net asset value. And the sale of the tower is just the start now of unlocking value for shareholders. Plus, the company remains a target for a takeover because it's just way undervalued at these levels. So I do think there is light at the end of the tunnel.
Yeah, and we do know, of course, what has happened, as it is a target for a takeover, but it really seems like it doesn't want anyone to have it. But before we get to your own stock pick, Annatjie, let's take a look.
Right price.
Exactly. Before we get to your stock pick, let's take a look at the stock picks that have found favor with your industry peers.
I'm going for this whole weight loss theme, and I think Eli Lilly is a company which Novo Nordisk leads the way with Wegovy and Ozempic, but I think Eli Lilly is going to come into the market, and even though it's had an incredible run, I still think there's upside this year for it. There's going to be more competition coming in for that area, but watch that theme. It's a big theme.
Yeah, Annatjie, Eli Lilly, an interesting one, because we saw its meteoric rise of the stock during the COVID-19 pandemic. And actually, even just, was it yesterday or in the previous session, we did see it also being one of the counters on the S&P 500 reaching record highs. What do you make of that stock?
Yeah, I agree with David 100%. It's not cheap.
Yeah.
It's expensive, but that PE ratio can unwind pretty quickly because it's underpinned by the demand for its products. And if I can tell you how many people I know that's trying to get their hands on Ozempic,
Yep.
and willing to pay great prices for it, and there's nothing available. So even if they face some competition, these diabetes drugs that can be used for chronic weight management going to remain popular for quite some time to come. So the prospects for a company, it actually do look great.
And again, it is in heavy demand. Even Oprah has admitted to using Ozempic to lose weight. Let's get to your stock pick for today. What will it be?
I'm going to go with Naspers. That discount to the net asset value is still in place. The stock is still attractive. It still has in excess of 25% in Tencent, and the regulators in China have recently had a softer stance on this crackdown on the tech sector. And also, if this interest rate cycle starts turning, it's an interest rate sensitive stock. So despite the fact that Amazon is entering the South African market, the company has already mentioned that they're not scared of that competition and that they're prepared. They're already injecting more cash into Takealot that will be competing with Amazon. So I'll go with Naspers. I think it's quite an attractive entry level.
All right. Well, thank you so much for your time and for your analysis on what is driving markets so far today, Annatjie. That was Annatjie van Rooyen from MyWealth Investments.